Welcome to The Other Side of Wall Street with your host, Ron Harrison.
Hello, everyone. Welcome to another edition of The Other Side of Wall Street. And today I have a special guest that's going to be on for the whole show. And normally, many times when people start taking my classes or talk about, want to come in and meet with me and talk about the class, one of the questions they always ask is what the success rate is, or how well do people actually grasp what you teach, or how successful are your students, or I guess because so many of them really would have the dream in the back of their head that they would like to just quit their job and stay home and trade their own funds and just change their entire lifestyle. So today I have a former student who actually, from everything I heard, I have not talked with him for many months. But from what I hear from other people, he is doing absolutely phenomenal. And I based on what I've heard, I believe he has moved to the top of the list of all-time students as far as success rate and the entire concept of grasping everything we teach. In other words, star student. So, Mark, are you there?
Yes, Ron.
Hi there. So I have with me Mark, who I guess if I remember, I think it was just about exactly a year ago you started taking the class, right? It was the fall.
Yeah, that's correct.
Yep. So prior to that, you had a totally different job, government job, nothing to do with finances, trading. I mean, nothing remotely related to this. And you started taking the class, and about 2/3 of the way through the class, you decided to put in your resignation, quit, take your pension, and start this new career path, let's say.
That's correct.
And like I said earlier, I have not spoken with you for many months, but I had heard from several of your friends just how well you're doing. So I hope that's correct.
Yeah, doing great.
And what's it? Were there any problems? Any? Did you just take off running and this thing started working from the beginning? Did you have any problems? Any hiccups? Any bumps in the road?
Oh, sure. Probably one of the hiccups I found is once, obviously in the class, at that time we were doing the high flyers, the Apples, the Googles, and the price lines, and then we started transferring over to SPX because of people were getting those high flyers called away from them or put to them. So on my earlier doing SPX, I realized that with the high flyers you have 10 or 11 different exchanges that are providing liquidity, and with the SPX you're only dealing with one, with the CBOE, Chicago Board of Exchange. So that kind of opened up my eyes that I wasn't getting filled as quick, and if it got close to expiration, sometimes you were having to do market fills, and you were really paying a lot more than what you should have just because of the time expiring. So I had a couple close calls on those. Luckily, those worked out, and then from there, I kind of adjusted the way I traded weeklies. And I know from your class, you always like to do Thursdays because you can get a better 10 delta. But what I found was from there, I might get a 50 to 55 cent credit. But if I moved it back to Wednesday, I could get 65 to 75 cent credit. And then by the following Tuesday, I could use 20 cents of that and close it out. Still net my 50 to 55 cents. And it also allowed me a couple of extra days if something, one of the sides were tested, then I still had Thursday and Friday to manage it. So that was probably the biggest problem I had, and then that was the way that I tried to counterbalance the problem with the liquidity and the CBOE.
To me, it's great just listening to you talk. I mean, it sounds. I mean, to me, if I didn't know who you were, I would think you've been doing this for a very long time. I mean, just the way just the words that are coming out of your mouth. I mean, it's, because so many students that I have, are still, a year later, some are doing well, some are doing not so well, but they're calling, that they need help, they need, tutoring, I guess you would say. But in your case, you sound like an old pro.
No, not at all. To be honest with you, Ron, the day we started our class, and a lot of people are not going to believe this, I did not know what a call and a put was. I didn't. I mean, I knew some financial stuff because I had dabbled in that part-time. I had my investment advisor representative license, but that's only you're getting people to buy, the mutual funds or to invest in the products you had. So I had a little bit of knowledge on that, but option size, I was totally blind. Did not know anything about it, nor how the other side of Wall Street, really works until, meeting you and starting taking your class.
So as far as you knew, the way to play Wall Street, of course, was to buy things.
Yeah, exactly.
Right.
And you make your money on the trailing fees of if they keep their money invested.
Yeah. Now, another thing that I find fascinating of not only the transition you made from, a totally different job over to trading full time, but not only did you do that, you also left Phoenix and moved to Mexico.
That's correct.
So, that goes back to when I was saying when I was on vacation a few weeks ago, and, there I was basically sitting at the beach, trading and thinking to myself, what better job could you have? You can do this anywhere. So you, of course, not just went on vacation and did it, you moved and you're doing fine.
Yeah, my wife's originally from here. We come down here all the time. We were doing good enough where she didn't have to work, and I have no family in other, than my friends. I have no family in Phoenix. All my family's in North Carolina, and I didn't want to move back there. So, it's funny you mentioned that. I giggled when you talked about being on the beach, and you're wondering, why am I in Tucson burning up all summer? And I totally went through my whole mind. I mean, if I was going to do this, it's got to be for the freedom. Mm-hmm. I mean, you can make money anywhere. I mean, money is not a problem if you got the drive and the will to make money. You can make money in other different things, but the freedom that this gives you is it's awe-inspiring. I mean, for somebody not to at least take a look at it, now maybe it's for them or maybe it's not for them, but there's tons of ways that you can manage your own money and do better than what the brokers and your financial advisor is going to do for you. I'm
much time do you think you spend a day doing that?
I treat it like a job. I love it, and I know I have so much to learn. I mean, I'm only in the options, category. I love to learn Forex and the commodities as well, so I'm well-rounded. So if it's the stock market's tanking or it's not doing what it's done and I'm sitting on the sidelines there, I can use my capital in other areas to still generate income. So I think it's a learning process. I don't think you ever have anything mastered, but as you continue to grow every day on your knowledge, it helps you in the long run. And obviously, if you learn from your mistakes, then you're going to do even better.
Well, I guess what I was asking, though, I mean, do you spend, the entire market hours sitting in front of your computer, or do you kind of put your trades on and then go about your life and do other things during the day?
Kind of about 50-50, Ron. What I like to do is in the morning, I like to get up before the market opens. There's two things I use on the TOS platform that kind of give me a feel of what the market's going to do based on a technical analysis versus what the CNBC or the other news are broadcasting about what's going to happen today. Because just like you said, they don't know. Nobody knows what the market's going to do. But what I found on TOS, there's two chat rooms in there. One of them is an Energy Cast chat room, and another one is a Shadow Trader Cast. Now, I don't watch the chat per se, but you can click on their videos, and they will actually pull up charts for you that give you the read on what's going on in the market, like the ticks on the New York Stock Exchange, the volume, and actually what the futures are doing for the E-mini ESs. So I like to use that on what the market's doing, especially on the days I'm going to open or close a trade. So I kind of get a feel of where I'm going to get the best price, entry price, as far as credit received. The best thing about TOS that I've seen is on the Energy Cast one, they actually have a guy that's sitting in the pits telling you what Goldman's buying, what the locals that are in the pits, what they're buying. So you can kind of see, along with the charts, you can hear the people in the background how the oil is trading that day. And I think it's just remarkable, especially when you want to enter or exit a position, you can kind of gauge, am I going to be tested on one side of my strangle or not? So I probably spend about 3 to 5 hours a day just kind of keeping an eye on that, just so I can get better market awareness. That's it. It's not to change any of my trades or anything like that.
And by the way, when Mark says toss, he's referring to the Thinkorswim platform, which is provided by TD Ameritrade, which is where we all have our accounts at. And it's time for our first break. Let's take that and come back and talk some more.
Here's another look into the world of trading.
Let's talk about zero-sum games for a minute. As we know, the markets are a zero-sum game, but it's not the only one. A couple of other well-known zero-sum games are the Las Vegas casinos and the state lotteries. And we all know our chances of making money in either of these venues are next to nothing. But if you think about it, someone makes money each and every time, and that's the house or the state. And the stock market industry is no different. The brokerage firms are the house, and you are left being the gambler. The brokerage houses makes money 80 to 90% of the time on every trade they make. Now what if we told you that you could trade as the house and give yourself that same 80 to 90% chance of winning on every trade you place, while all the while keeping your account mostly in cash? Call us at the other side of Wall Street at 949-734-1698 and let us show you how. Again, that's 949-734-1698. And let's make some money. Welcome back to the other side of Wall Street, and we're talking with my star pupil student, Mark. And Mark, when I was listening to you just before the break, and you were talking about, the different places you went to on toss in the morning, I just want to say that, those things are things that I didn't teach you. So, I mean, not only are you grasping what you've learned in class, but unlike a lot of the other students, you've also even morphed into even more than that. I mean, found these things on your own. Very impressive to me.
Well, thanks. I think you're giving me too much credit. I mean, obviously in the class we used to talk about some of the shows, that we watched, like the Tasty Trade guys versus watching CNBC. And when I first started, I watched the whole show every day. But what I learned is even though their content is good, probably 90% of what they talk about or, what they're doing doesn't fit me and my trading style. Mm-hmm. So I basically dropped it down to I really only watch maybe one person on the program, just because I really like his technical analysis and his psychology.
You're talking about Slim?
Yes, Steve Miller, right. And I love watching him. And the Energy Cast part, I just found because I clicked on the Shadow Trader stuff, because they give the what the futures were doing the night before, leading up to what they're doing. And even though those guys are day traders, I don't use it as a day trader thing. I just use it as to get a feel of what the market's doing. If I'm going to, if I need to move a trade, and I can look on my working order, if the price is going up or down, I can look on the internals and kind of say, okay, it should come my way, I'm just going to leave it. Or it's going back away from me, then maybe I need to adjust that position.
So let me ask you another question, and of course, the coolest thing about you being on the program and is the fact that so many people that would take my class or are thinking about taking it, or even if they don't take my class, just people that just want to do this in general, make a life change, quit their day job, something they hate, and manage their own money because they don't like how other people are managing their money. So you, to me, are the absolute perfect example that it is possible. So the question that I wanted to ask you, would you mind, again, just to give these people listening to the show, some perspective about how possible this is, would you mind saying how much you started out with when you took your pension, or is that?
Yeah, I left with what I had in my 401k version of what I put in my pension was roughly about 170.
So I don't know exactly how old you are, but I'm going to guess somewhere it starts with a 4 in the 40s.
Yeah, that's That's right.
So again, for people listening, here is someone in his 40s. He decided to retire on that amount of money. So a year later, what is it? Do you mind saying?
Well, actually, I didn't retire until January. I didn't actually get my money till February. So
well, still, wait, that's even better. I mean, actually,
right. I'm over 300K right now. I have some positions in crew that I should probably be closing out next week, which would get me another 50 to 75.
So then, just to recap, you knew nothing about this a year ago. Less than a year ago, you decide to quit, take your pension. In a year, you now have since moved to Mexico. You trade for a living. You've just about doubled your money. So, with no help from anybody other than, I'm not trying to tout what I taught you. I'm just trying to say that this is possible for anyone to do this if they put their mind to it and really, take the time to learn what it is they need to do.
Absolutely, Ron. I think you have to have the right teacher that I know there's a lot of people that spend a lot of money on these classes, but they get bits and pieces and they don't put the total package together the way you do. You break it down from, A to Z for everybody. So the ability to grasp what it takes to make money is there. You just have to apply yourself, and then emotionally is probably the number one cause that's going to cause somebody not to be able to do it.
Did you, in the beginning or at any point along the way, have you had any trouble with emotions, with greed, with since all your eggs were in one basket, and in the beginning for a retirement at that age, under $200,000 is not really enough money for pretty much anyone to retire, but yet you've done it wonderfully. But did greed, were you trying to squeeze too much out of something? Any problems come up there? I would guess the answer is no, but I just want to hear it from you.
Well, no, the answer is yes. I did have a problem on the SPX, which it worked in my favor, but it was a great learning lesson from me. I had a spread on for $5, a put spread, and it was underwater. And when I rolled it, I noticed, well, if I kick it out to a $10 spread, I get a bigger credit. So why not do the $10 spread? So I did that, and then as with a $10 spread, it eats up more buying power, and I was like, oh no, what did I do? But luckily the market went my way, and I was able to close the position out. But that was scary. That first, okay, I did that, it worked out, but big X in my journal, I'll never do that again.
I even do that, but when I do that, it's so that I can take a position that is underwater and move it somewhere where I think it has a very excellent chance of expiring. And so I use it for that reason. I don't use it necessarily because I can collect greater, profits, but I do it because, okay, this will put me somewhere where it'll expire. It won't cost me anything really, as far as, because I'm getting a credit, not a debit. And, but I've done those, I don't know, last month.
Yeah. I'll stick with the 5 for now. Maybe when my account's a lot bigger, then I'll worry about the $10 spreads. But right now, I think the biggest thing I've learned is because we do 10 delta, which means 90% chance of it expiring worthless. Well, so 1 out of 10 times it's going to happen. But if you stay small enough and relative to your account position, if that one goes against you and it takes you 3-4 weeks, for it to get fixed and go away, you still have remaining buying power in order to continue on with what you've been doing the next nine trades. So, I'm a couple times I've had my BP get lower than I really wanted it, and then now I'm a lot better. I'd say, the trader I am today is different than I was 3 months ago, and then it'll be different a year from now.
What percentage do you try to keep free?
I like to keep at least 50% free. Sometimes more. It just depends on what positions I'm doing. So if I can go 40 to 50% in SPX, it was actually a little lower when we were just doing the high flyers, just because we didn't do as many contracts. So I usually kept that a little lower, and the possibility of it being put 2 year called away was a little greater than the cash index.
And when you say 50%, is that because I know you also do crude oil futures? So is that a total of all the positions? You're only about 50%.
Yes. Yeah. I don't like to go any more than that because mean, I still have to, pull money out to live. So I don't have any other form of income other than my trading. So I want to keep that there, just to pay my monthly bills. And then it's there to, like you taught us, if one gets in trouble, you have the free cash to fix the position, and then once it's fixed, then you're back going again.
Yeah, that I always say that's your cavalry that can come to the rescue when you're in trouble.
Right.
Yep. Okay, well, let's take our second break and come back and continue this.
Here's another look into the world of trading.
I have a question. How many of you think you can predict the future? Did you know that you're trying to do just that when you purchase a stock? When you own a stock, the only way you can profit is for the stock to increase in value. And if it trades flat or trades down, you end up losing. What if I told you that there is a much better way to profit without ever owning that stock? And what if I told you that you could take a position in that same stock and profit no matter what the stock does? That's right, you can profit if the stock goes up, trades flat, or goes down. No matter what, you profit. This is how the pros trade, and this is how you should be trading. We are the other side of Wall Street, and we would love to teach you how to trade like the pros, increasing your odds from 1 out of 3 to almost 3 out of 3 on every trade you place. Interested? Call us at the other side of Wall Street at 949-734-1698 and sign up for one of our courses. And again, that's 949-734-1698. Now let's make some money. Welcome back to the other side of Wall Street, and we're talking with Mark, my star pupil. Mark, you're still there, I hope?
Yes.
Of course. And we've mentioned a couple times, that you're doing SPX trades. Of course, you started out with stocks. We left that world and went to SPX and crude oil. But let's talk more specifically about the types of trades. So, do you have like a go-to strategy, like your main strategy for your account, and then maybe the other ones are secondary, or is it 50-50 between crude oil and SPX? And are you doing on SPX? Are you doing condors? Are you doing iron butterflies? Just what's the mix-up, and what stuff do you like most? Okay,
I love crude. I think the strangle on the crude that you taught is, I don't know, that's like the bread and butter, I would say, of what I like.
And I believe someone told me that basically crude pays your bills and the other stuff is what grows the account, kind of.
Yes, I live off of my crude strangles a month. And usually, like you taught us, it's 110 or 92 or 95, and obviously now I would have moved it lower based on what the crude's doing now. And then I do the big iron butterflies that you had taught some of the other students after I was already gone. When I had lunch with you, you shared that with me. So I've done one of those and kept about 60% profit.
60 or 50?
60.
60%,
okay. Profit.
Okay,
on 200 contract iron butterfly.
Okay, so how did you do that one? I mean, how did you handle that? So what would if you were going to tell somebody how to do it, what would you say?
I like to go out 45 days just so I can get that theta decay starting around 25 to 21 days it really starts kicking in. So I prefer that the market, would be two-sided, but right now we pretty much got the molasses going up.
Yep.
So I try to get rid of either one of the sides, and preferably I like to close them out. I know Utah has closed them out at 5 cents. I like to close them out at one of the sides at 50, and then see if I can roll. So obviously, the way the market been, my calls would be in trouble. See if I could roll my calls into puts. Pay $1 or whatever the lowest I can find, depending on what week I'm going to, because I like to roll backwards.
Mm-hmm.
So if I put it in 45 or 60 days, I can actually maybe take that off in about 40, with still getting about 60 to 70% profit.
So you'll take your call
money.
You take your call spread and roll it backward in time to a put spread.
Correct,
and hopefully pay about $1 to do that?
It's usually been about $1.50, but by the time I put my a 10 delta call on there, if I can get a 10 or a 5, that might give me another 25, 30, or 50 cents. So I try to keep it at a dollar. So if I paid 50 cents, I paid $1. So I'm looking to keep right around $3.25
of the rough
to $3.30
of the roughly
the initial
480
the initial premium.
Are you like 480 you're getting when you put them on?
I've gotten one. I've gotten 485. One was 475.
Okay, so right in there. Yeah, 480 be the middle.
Yeah, right about.
Yeah.
Mm-hmm.
Cool.
And so I like to do that, and then I like to do the SPX weeklies Wednesday to Wednesday, and take whatever profit I have on Wednesday. So if you're collecting 50% or 50 cents on a 100 contract, that's right around what are we talking, 20, like $3,000 a week.
Mm-hmm.
And I just use that to grow my cash sweep and to grow my buying power back up. Just live off the crude.
Great. Do you use technical like charts and technical analysis much, or are you pretty much Delta trader?
No, I do the Delta, but I look at the charts. I try to get me a eyeball figure. If it's like, if I know the market's going up, and we've been trending for, let's say we're 10 days into the next upswing. Well, you taught us that most it's usually 18 to 21 days before there's maybe a small pullback or whatever till it resumes back up. So I've been tested more times on the calls than the puts, obviously. So sometimes I'll do I'll move my put side up a little and move my call side further away.
You mean while you're in the trade, you actually roll it up?
No, when I put the initial trade on.
Oh, okay.
So I might do a 13 delta and a 6 or 7 on the put side, and maybe a 6 or 7 on the call side. But as far as technical analysis, I love Fibonacci. If there's a downswing, I like that. I use swing points that you taught us, higher lows, higher highs, or lower lows, lower highs. I like to use that as a gauge, and then I draw trend lines as well, and I just eyeball it. So there's a couple of books I've read that kind of help me, the candlestick charting techniques with Steve
Nissan.
Steve Nissan. There's another one, Fibonacci trading by Carolyn Borodin.
Yep, she's like the Fibonacci queen.
Right, exactly. And then I have a couple other technical analysis books that I look at, but some of them are written by like aerospace engineers, and it hurts my head to read.
Like I've mentioned other times, if you're doing trend lines, read some books by Tom DeMark.
I have those.
Okay.
Your last guest you had on, those books he recommended, you guys talked about. I already have them ordered. I'm just waiting to go back to Phoenix to pick them up.
Oh, good. So in your back to your trades, your SPX. So if you put on 10 delta trades, and they're just iron condors, of course, 10 delta, and you say your call gets in trouble, how do you typically fix the troubled calls at that point? Since you haven't collected that much money, if you collect 50 cents up front, you don't have that much money to spend for repair.
Okay, well, so if I wait to Thursday or Friday to put it on, the most I'm probably going to get is 50 cents.
Right.
If I put it on Wednesday, so my goal is to be out by the following Wednesday. Even if it costs me 20 or 30 cents, that way I'm still profiting 45 to 50 cents.
Mm-hmm.
So that's just me, and then if it does get in trouble, I'll roll it. It depends on what the technical analysis is showing me. If it's showing me that, the moving average is the 5 to 15, if they've crossed or whatever, it looks like you might get a downswing, maybe I roll it out a week.
Same strike?
Maybe I roll it. Yeah, the same strike,
okay.
Correct.
Just buy more time.
Right, yeah, I'm just buying time because, if it's starting to come down, then I'm buying time. If the following week is still not doing it, then I'll roll up and out, maybe another week, and then raise my strike prices higher. So it's hard. I don't really have a textbook. If A, like you said, if A happens, you do B. It's like an art. There's 5 or 6 different things that you can do in order to make the trade go away, or put you in a better position to make it go away.
Yep. No, that's constantly what I tell people, that there's no set thing. It's just you have to look at all your options on your options, and just see what works the best. And I say my first rule of thing is to get a credit if I can. If I can do something that gets me a credit, that's just more money against your cost basis. So, I just take the credit and I go from there. And if there's nowhere I can get a credit, nothing I can do to get a credit, then I start looking at what's the least painful move I can make that would cost me the least amount of money and put me in a better spot.
Right. I think a lot of that when even in your class, when you told us that, I'm like, well, Ron's been trading for 30 years. How come he doesn't have like a flow chart? I'm used to the government model. Hey, A happens, you do B, C, or D.
Yep.
And you're like, no, it's an art form. Here, let me show you. And I'll never forget the day that I decided to leave. It was in your class, second week of December. It's on a Sunday, and you were showing us how to fix some stuff with the custom feature. So I'm thinking to myself in the class, okay, so I can put this on. I'm playing the house. They're giving me money to place the trade. If it gets in trouble, we're going to know how to adjust it. And if you do money management, then you're not going to get in trouble. You just if it does go against you, you just put the same trade back on, or maybe with a couple more contracts to make the money. So at that point, I knew that I was leaving. Like I'm done.
When you say leaving, you mean leave your job?
Yes, I knew at that point I was leaving my job, and this is what I was going to do. I loved it. I just fell in love. I fell in love with it.
And again, listening to you talk, it's like you've been doing this for 30 of your 40 years kind of thing. It's amazing. Because everyone, I mean, it's not that this stuff is hard. I don't think it's hard at all. But I think some people's thought process is such that it's not as easy for them as others. And then for some, it's they just click right to it. And like the other lady I've had on the show a couple times, Karen. And, she had no desire, no knowledge, she didn't even want to come to the class. Her husband made her do it. And then she took, it was like a fish taken to water. I mean, she just sat in one class and she was hooked, and, she's never looked back. So you appear to be exactly the same.
Well, I think everybody has a responsibility to their family and to themselves that they want to do better. My number one goal was I wanted freedom. Working 20-plus years in the government, I didn't want a boss anymore. Mm-hmm. And from what I knew as far as my financial knowledge, nothing to do with options or trading, but of what our pension system was in it's in very bad trouble. So I could stay to get a pension that might not be here. We could be like Detroit,
right,
and not have a pension in 3 to 5 years, or I can take it that's there, do something that I love, continue to learn, and have more freedom than I've ever had in my life.
So on that note,
that's it.
On that note, we need to take our last break, come back, and we'll finish this up. Hey traders, want to jumpstart your trading? Well, I would assume that since you're listening to this podcast that your answer would be yes. And as they said in The Godfather, what if we made you an offer you can't refuse? And that's exactly what we're going to do. How would you like it if we gave you all the trades we make in our own accounts in real time so you could trade right along with us and profit as we do? And what if we met once a week for an hour to discuss our current trades, any other trades you may have open, plus discuss any problems you may be having in general with your trading? And that's 1 full hour of group coaching each week. Also, what if we threw in an additional 1/2 hour of private one-on-one coaching each month to privately work on issues you may be having with your trading? It could be things you didn't feel like sharing in the group sessions. Also, what if we threw in a weekly end-of-week market review analyzing the past week's market and what to look forward to for the upcoming trading week? That would be delivered to your inbox every Friday after market close. And what if we threw in a free copy of our latest book, Reprogramming the Trader's Mindset, to help you get your trading emotions of fear and greed back in control? And what if we also sent you our monthly newsletter packed with trading tips and upcoming market events? That would be very useful, I'm sure. And to cap it all off, what if we gave you a 30% discount on all of our live 3-day trading seminars? So altogether, this adds up to $1,269 in monthly value, plus another $1,680 in course discounts to use whenever you like. And if you think all this sounds good, then you must realize that this is a very powerful addition to your trading business. And as with any business, in the beginning, you will need a mentor or support team to help your business grow and to keep you on track to achieve your maximum trading potential. So the small cost to this extensive package is only $49 per month. And of course, you can cancel at any time, but since you will be making far more than the cost of the program by just copying our trades, we doubt you're going to want to cancel. So don't wait any longer. Sign up today. Go to tradersacademy.org. Again, that's www.tradersacademy.org. And do it soon because memberships are limited. And it's our promise to you that if you copy all of our trades and you don't make at least double the first month what you paid, we'll gladly refund your subscription payment. So join us, and together, let's make some money. Welcome back, the other side of Wall Street, and we're talking with one of my former students, Mark. And during the break, Tom, my producer, stuck his head in the door and had a question that I agreed with. From your perspective, Mark, what do you think would be the better type of person to be doing this? I mean, would it be someone with a heavy math background, analytical background, logical back? I mean, what personality type, from your perspective and your experience, do you think would work out best to do this?
I think anybody can do it. They might have to change. So a little bit about me: high school graduate. I served in the Marine Corps, not as an officer. College dropout, just a hard worker. So I don't think you have to be an Ivy League school or have worked, on a firm or somewhere to gain the knowledge. If you have the right mentor, the right person that knows how to teach you, anybody can do it. Personality-wise, I think anybody can do it. They just have to apply themselves. Now, if they get scared easily or their emotionals takes them and shuts them down, those would maybe be the people that would probably need to shy away from this type of trading.
Yeah,
I think it might paralyze them to be able to make the moves that they need need to make.
I totally agree. Yep. What are your since you're doing so well? I mean, obviously, pretty much doubling your money every year. I mean, if you project that out, that's a pretty phenomenal accomplishment. So what are your goals moving forward? I mean, just keep doing what you're doing and not change anything, or do you see this growing, or any ideas there?
I see it growing. I mean, I love doing what I do. I love knowledge, right? So I know that my knowledge of what I really need is probably 20% there. So I will continue to work on it. But the goal is obviously to be debt-free and financially independent.
We have a call. John?
Yeah.
Hello, John?
Yes.
Hi there. You have a question for Mark?
Yes. I would like to know how you got started as far as what did you start trading? Did you just start trading with like vertical spreads and then moved into iron condors and then to strangles, or what would you suggest a progression of learning, I guess?
Okay. I started with obviously what Ron taught us. My background was zero. Like I said, when I walked into this a year ago in Ron's first class, I knew nothing. I didn't know what a spread was or anything. So I started out with iron condors on high flyers like Google, Priceline, and then once we kind of went to the SPX side, I continued with that and then added some iron butterflies. The only time I do anything else is on crude, which I do strangles, and that is based on technical analysis where the actual market is of where I'll place my strikes. But to say where anybody should start, everybody's going to have their own thing. I mean, if you look at the Tasty Trade guys, they got these weird names for stuff that I still can't comprehend. So I found what works for me. The amount of capital that's required to make the money is it just fits my style. So, not saying I wouldn't change in the future, but as of right now, I'll stick with that until maybe I go into Forex or commodities or something along that line.
So, in other words, don't fix something that's not broken.
Right, and I know the market. Like if you'd asked me a year ago, I'm like, no, the only thing I trade is the high flyers: Priceline, Google, Apple, Netflix, Amazon. And then here we are, a year later, and no, we don't do that anymore because it can, it's SPX is easier. Not easier as far as, well, let's put it this way: it's easier to manage one position than having 5 positions on 5 different high flyers.
And of course, also with the individual stocks, a big earnings announcement or news announcement can really throw it way out of where your trading range is. Whereas SPX, all that's pretty much smoothed out for the all.
Which luckily, when we were in our class, we had that happen to Google and
right away.
Chipotle.
Yep.
And luckily, I was only trading paper. I think the biggest thing is start with paper, but you don't want to be in paper too long because, paper almost is like a video game. You can get filled in paper like nothing. You can roll in paper like nothing. But when it's real life money and there's somebody that's got to be on the other side, it's not going to be as fast and easy as you think.
Yeah, paper trade's better, really just best for learning how to use the platform and getting familiar with the mechanics of it. But
yeah, totally agree. Mm-hmm.
Yeah. So does that answer your question, John?
Yes, thank you very much.
Sure.
You're welcome.
So then you see yourself just continually doing what you're doing and kind of like it, even though it's not simple, but keep it simple as far as, not progressing to other types of trades, just or strategies, just doing the condors, the butterflies, and the strangles on oil. And
one thing that I have added to it is the crude. Just because, if you can go back years.
I know where you're going. I forgot I was going to ask you this. Keep going.
Okay. So I went against Ron's principle that we don't buy, we sell. But I was looking at the crude charts and I'm like, it spikes before summer and it not spikes down, but it has a gradual decrease after summer. So if I use a part of my strangle that I take in and buy a put, a naked put, or not a naked, but just buy a put at the money, and it drops $4 or $5. Well, it's 5 times whatever the number of contracts you got. Mm-hmm. So I only want to do that maybe 2-3 times a year at the most, just to add extra income. But you can. I've made probably so far $60,000 on that last month. And this month, if I take them off, it's probably going to be another 60, and then I'll be done until probably summertime. So that's the only thing that Ron didn't teach us, that I kind of just went out and did on my own, based on watching Slim on Tasty Trade when he talked about it, and he showed different correlations of when gas goes down and crude follows with it, and the amount of pressure, down pressure that it had on there. I'm like, well, this might be an easy $3 or $4. The worst case scenario, I lose 5.
Okay, well,
the wife doesn't get her allowance for the month.
Well, I'm sorry to say, but we're running out of time. So just anytime you want to come up here and start teaching my classes, it's yours.
I appreciate it.
Yep,
love the show. I listen every Saturday, and for the people out there, if Ron is the maestro, if he can't teach you, you're probably not going to be able to learn it.
And thanks for saying that. I'll send you that $5 later.
Awesome.
Okay, thanks, Mark.
You got it. Thanks, Ron.
Okay, and that's it for today, and we'll talk to you next week.